I mean, I think people are absolutely shocked, absolutely surprised, and any reason why we have a market rally seems to be more of an excuse than anything else. I mean, we can point to the ISM non-manufacturing data that came out this morning. That was decent. We can talk about Greece meeting their fiscal targets for February. We can talk about Ireland and Portugal obtaining bailout money. But the fact is, everybody is shocked to think that we're at a 5.5-year high in the S&P 500. It's astounding.
Yeah, absolutely. And you say, yeah, we can talk about all those factors, but really this is all about the Nanki, isn't it?
I do believe it is, at least a big part of it. I mean, let's be honest. I mean, at least in the U.S., valuations are reasonable. Corporate earnings have improved, and we're in a period of macro tranquility, as it were. So with that, with central bank intervention around the world, it's not surprising that we're rallying like this, but I'm completely shocked and surprised, probably like everybody else behind me.
Okay, what about that services sector information you got out today? It was pretty positive, that ISM non-manufacturing read, wasn't it?
Yeah, I mean, it was, and that probably just added fuel to the fire. The PMIs that came out in China, the flash PMIs weren't that good the day before, so I think this kind of equals that out, but that's good. I mean, overall, it seems like our manufacturing data is moving in the right direction. I mean, the PMIs that came out, I think in Europe, were still sub 50, but it's moving in the right direction. I think it's just continuing to prop up our stock markets.
Yeah, absolutely. So just talk us through what you've been trading over the past few days and whether you'll take a different outlook now that we've continued to rally and the Dow has hit that record high. Are you preparing for a pullback?
Well, I'm definitely preparing for some sort of pullback. However, that does not mean I would get out of my stock market or equity exposure. I just think I would stay near normal weight allocations, waiting for a pullback, because really the stock market right now, we're talking about central bank, but it's really a market of multiples right now. And I think getting above 14 times earnings per share is starting to get a little bit heavy if we don't have numbers to support that growth. So right now I'm standing aside, waiting to add if we do get that correction, and I'm still looking for 1400 to 1450 in the S&P before I would, add exposure.
I guess the question is, what else do you buy? I mean, do you buy bonds here if you want to underweight your equities a little?
Matthew, that's a good question. And I think right now I just would keep the balance in cash and just take advantage of negative investing, as it were, when we do get that pullback, just to buy the stocks that you really like or looking for overall macro exposure. So I'm not really keen on buying bonds right here, especially a 10-year at 189. I just would keep it in cash.
What about gold, with all these macro concerns really paring down and a few question marks over QE? Do you expect that to remain pretty sluggish, Larry?
Yeah, I do. I think on one hand, you're going to see central banks continue to buy gold. That's going to provide some sort of backstop, but I don't think it's a big enough backstop to put a new rally in place for gold. I mean, I personally believe gold is going to be higher over the next 6 to 9 months, but there's a lot of risk premium embedded in that. So I wouldn't just buy gold as a standalone investment. I just think things have gone too well for too long, and I do think there will be a chance to see gold spike up. So I would buy it here, but I wouldn't buy it as a standalone investment.
Okay, and currency markets, are you trading those at the moment?
Yeah, we're definitely trading all the markets, but we're in different durations, so it depends on what you look at. But right now, one of the interesting trades continues to be being long the euro and short the cable, or the British pound. That's something that we're into right now, and we'll see what happens with that. Tomorrow's going to be a big game changer for us.
Yeah, absolutely. We've got the ECB meeting this week. We know that's going to be a big one. I mean, Draghi's been giving us, I guess that there's been a real emphasis on that transition mechanism, but it isn't clear what a cut would do other than placate investor expectations. What do you think we're likely to hear out from the ECB this week?
I think he's going to come out with some type of creative scheme to keep us all really happy. I mean, I don't think he's going to be able to draw up a great plan overnight or for tomorrow, but I think going forward, just trying to cut down on the convertibility risk that's pervasive on the continent of Europe. So I don't think they're going to lower rates, even though he's got plenty of ammunition to do so. I think he's just going to offer us all hope that they're going to do something with the convertibility risks that they have in Europe.
Yeah, he still holds a lot of power in the markets, doesn't he? His words seem to do enough sometimes without actually having to make any big policy decisions, Larry.
It's amazing. I mean, just a master stroke of genius. I mean, especially when you look at the summertime, that was really a demarcation line with the Bumblebee speech, and everything has changed so much since then. Maybe it's time for round two.